Hey, folks, welcome to the weekly wrap up. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. What a week, folks. I'll tell you, looking back, we had a lot of economic data on the jobs and labor market, initially showing some weakness, right? ADP, jobless claims were both on the weaker side. But then this morning, we got our non-farm payrolls report. And that non-farm payrolls report came out at 139,000. That was a little bit better than expectations. And it really calmed the nerves on the labor market front, right? In fact, we saw the 10-year yield actually moving back up a little bit as Fed rate cuts were then being diminished, meaning that people were expecting potentially more rate cuts, but now they're expecting a little bit less later this year. Then you throw in the whole Trump and Elon Musk feud on Twitter and Truth Social, and it really was an exhausting week. We also had Broadcom earnings that came out, which is a $1 trillion company in the semiconductor sector. That stock, by the way, did sell off, but as I told you guys in the game plan, it was basically priced to perfection. The stock had gone up nonstop basically for the last 2 months. So unless, like I said, they were going to cure cancer, there was really little chance that it was going to go much higher. And really, you didn't see a big down move, just a small pullback today. Now, there are some other stocks I want to get into, but first, let's take a look here on the charts at the intraday S&P. So this is the intraday S&P. Here's your gap higher today that was on the back of the jobs report. Notice we initially surged up. Then you saw some profit taking, just a little minor profit taking, then kind of a late day push up, and then a little bit more profit taking as we come into the final minute of the trading day. So all in all, it's going to be a solid day. S&P 500 up just over 1%. Notice this, folks. This is really interesting. So this has been my zone of resistance, right? So this level to this low here. Notice again, we came up into it. It was rejected. We then came up a little bit lower. It was only slightly rejected, right? The market seemed to be getting more and more confidence. Then we pushed briefly above it, then got pushed back down to this line right here. And then today we're going to actually close solidly above that level. And in fact, right now we're trading at 6,003 on the S&P. So we have recaptured the $6,000 level, at least as of now. Granted, there's 1 minute to go, so we could always see a sell-off into the end of the day here that goes back below. But as of now, we're 3 points above that level. Now, just zooming out here, right? So what are we looking at here? So number one, we're looking at this pivot high, which is your all-time high. Now, if we look at where we currently are, you can see that we are now only 2.44% away from our all-time highs. So again, not far at all. In fact, by next week, we could see us at new all-time highs. Now, the one thing I want to just reiterate to you guys is I never shy away from telling you major things on the market. I think it's the transparency is of the utmost importance, not just on the charts, but also in cycles. And the cycle data that we've been looking at does tell us that mid-month-ish, there is a cycle coming up. So just be ready for that. It doesn't necessarily mean that instantaneously we're going to turn in one direction, but considering we're floating up gently here, part of me thinks, like I said before, and I've said this in the game plans, is that we could float up into those all-time highs, pierce them, which will get the last kind of people on the fence bullish. Oh my goodness, new all-time highs. We all know how the media is, right? They'll get out their pom-poms and start cheering like crazy, which gets even more retail investors on the bullish side. It also stops out a lot of shorts, right? But then the question is, as we come into that pivot point, that cycle date, does that then put in a short-term high? So let's really watch between the 15th, and again, we're talking weekends-ish type area too, but let's right around that mid-month period, whether it's the 13th to the 18th or whatever it is, let's focus on that next week into the following week, and just let's watch to see, do we get a reversal signal in the charts that confirms some sort of short-term top? Okay. So let's keep an eye on that. Now, going back to the charts here, again, we know our all-time high will be resistance, but we know markets tend to pierce them. One little level that I'm also watching is this high pivot. If we connect this right through here, look at this, exact high to exact high to exact high. And that, again, would be a natural pierce of the all-time high where people would get very bullish and then potentially a reversal. And it's really only about 200 points away. And by the way, the S&P has now closed for the weekend on this Friday afternoon at 4 p.m. Eastern time. It closed at 6,000.33. So they held it above the even number of 6,000 by 33 cents. Amazing. All right. NASDAQ. Let's look at the NASDAQ here. The NASDAQ, look at this downsloping. So we have an upsloping trend line on the S&P, but on the NASDAQ, we actually have a downsloping one, which could insinuate possibly that the NASDAQ is closer to a top. Now, again, if we look at some of the semis and how much they've gained, that might make a little sense. But this high to this high to this high, this puts us on the NASDAQ at around 19,860. And we currently, based on today's close, 19,545. All right. So again, it's about 300, little over 300 points away on the NASDAQ. Now, the US dollar crept back above this key trend line. Look at this trend line this week. On Monday, we closed below. Tuesday, we closed above. Wednesday, we closed below. Thursday, we also closed below, but we did not confirm. Now, why not? Well, to confirm, you must close below the low of the previous day right there, and we can clearly see that the markets did not. On the dollar, it closed above. Therefore, it is not a confirmed breakdown. And remember, the confirmation signal, I created this signal to essentially keep investors like you, like me, away from getting fooled that it's a real breakdown versus a fake out. The institutions, they love to kind of get people to stop out of their positions, then jump on the other side and then whip it. Then what do? They whip it right against us, right? We've all been in those situations, right? I'm no different than you guys in that respect, is that, earlier in my career and even to this day, sometimes I get caught off guard. They do something, they make me look like, oh, it's breaking down. So I exit my long, but then all of a sudden it reverses, right? We've all been in those situations. The confirmation signal, and I teach this in the Winning Trader series, is exactly that. It gives us a high probability that it's a real breakdown when it actually confirms versus a fake out by the algorithms and the institutions. Okay. So just something to keep an eye on there. And I'll continue to kind of unveil this. And don't forget, we have Investor Empowerment Day coming up later this month, and we will have a sale. I only do about one sale a year on the Winning Trader series, but it will be for about 50+% off. So it's pretty special. All right. The 10-year yield. The 10-year yield had a great day today, right back up to this trend line up and closing at 4.506. So that's interesting. All right. So number one, did we ever confirm below this trend line, right? Here you closed below, we closed above, we closed above, we closed below, never confirmed. So that's just another signal that you had to be careful there. It looked like it was breaking down. They whipped it right back in the other direction. Now, listen, that doesn't mean it can't turn back down, but the labor data that we got today certainly shows us that the markets or the labor market is not in free fall. And I think that earlier in the week, many people were starting to say, oh my goodness, the ADP numbers were weak. Then you had jobless claims jumping up, which is people filing for unemployment. People were saying, the non-farm payrolls, if this, we could be in for a doomsday, right? The massive collapse in the economy. Clearly, that's not the case. Although I will caveat it with, they did revise the last 2 months down by 90,000 jobs, right? So, I mean, today we had 137,000 jobs added. Yeah, I mean, if you revise it down by even 50,000, kind of a weak number. But listen, that's neither here nor there. I always stress to you guys out there, there's so many people that always post comments that are like, oh, well, they're faking the numbers. Frankly, who cares? Because for me as a trader, I trade the charts. And if the charts do something, that's all that matters. Trust me, I've learned the hard way that, I might believe something like, oh, they're faking the numbers, the market should go down. Well, if it goes up, what good did that do me? It just went against me and I just lost money. So trading the charts is really the answer there, is these preconceived notions. Even if you're right, it doesn't really matter. Because if you're, think about that. Like, oh, yay, I was right. They were faking the numbers, but I lost $500,000 because I was stubborn and I didn't, okay, well, big deal. You were right. You still lost $500,000. You guys know what I'm saying. Anyways, I digress. But in any case, let's go back to the charts here. Tesla today did recover, although it didn't really recover immensely. I think part of the issue here, and you can see that late in the day, Tesla started to come down. This is the intraday Tesla chart. So you can see early in the day, it was holding up, and look at how it went to sleep right here. But look at the last hour, it started to sell off. Now, why do you guys think that might have happened? Well, in my humble opinion, my guess is that investors said, all right, wait, I don't want to hold Tesla over the weekend because what if a Twitter slash, Truth Social war of feud erupts again over the weekend? And so my guess is you had some people exiting the Tesla longs into the end of the day just because of the risk of holding this over the weekend and that something could erupt again. I mean, who the heck knows where things are on Sunday night into Monday. Robinhood, look at this, guys. This is really an interesting chart. Robinhood getting crushed into the end of the day after being up significantly. Now, listen, the stock was still up tremendously, but I want to show you this, guys. Look at this chart right here. I believe this is the high. So this is your highest point in 2023 right here. You connect it right through here and look at what you got today. Now, look at that. Perfect to the top, and look at the high today right there. Now, what's interesting about Robinhood is there's been a lot of speculation that they're going to be added to the S&P 500, and they might be, don't get me wrong, in all fairness, eventually I think they will be, but it's just interesting because a lot of investors were buying it on the assumption, which then was factoring in that they would be, which then opens the door. If it doesn't get added to the S&P 500, there's a lot of downside there. Meaning that people will all dump. So again, interesting to see that late in the day. I'm guessing this was more institutional, just being like, let's cash out, especially with the technical chart of Robinhood that had basically gone right up into that major pivot. So it'll be interesting to see what happens. This was also a topping tail yesterday, which is a bearish reversal signal. And remember, when you get these signals and the volume is relatively high like it's been, that means institutions are generally selling into retail folks. So listen, could it be added? Maybe it is, but my guess is this run up on Robinhood has mostly factored that in. Maybe it were to gap up a little bit, but then ultimately, I would guess it would come back in. So always be a little bit careful about chasing. Even if you hear a rumor about them being added to the S&P, use your brain and look at the chart and say, okay, well, is this chart trading down here? Okay, well, then maybe it is a good buy. But after this type of run, be very, very careful, especially when it's coming into a major trend line there. NVIDIA today, it was up a little on the day, but only 1.2%. It is still stuck right at this level. This was your high on earnings when they released earnings. It retested it yesterday and today. Can it break through? If it breaks through, there's somewhat limited upside. This resistance and then this resistance, or is it going to get rejected back down? Ultimately, it wouldn't shock me to see NVIDIA go a little higher, but I still think eventually it's going to come in dramatically. But again, it's going to take a weaker economy probably and a slowdown in the AI data center space. All right, let's take a look today at Bitcoin. Bitcoin rebounding after having a nasty sell-off yesterday with the stock market. It rebounded today. Now, again, it's back inside of this support zone, which is good. Notice closed below. Did it confirm? Nope. So again, for me at least, I don't get kind of, faked out by that. Confirmation signal literally saves the day so many times, both on the breakouts and breakdowns. But here we are back into this zone. So you could say, okay, it's back into support zone here, but just continue to be careful from the only aspect. And this is my only drawback on Bitcoin. And I love Bitcoin long term. But in the short term, it's very clear based on yesterday's down move when the stock market sold off and then today's up move when the stock market rallied, that it remains a risk asset. So when you're looking at Bitcoin and you say, okay, well, what are my main risks for Bitcoin? To be honest, the only main risk, the immediate one for me that it has is the stock market. Unfortunately, right? For Bitcoiners and people that love Bitcoin, Michael Saylor, like it's just, now listen, if you're a long-term hodler, probably doesn't matter, right? I mean, who cares what it does in the next 6 months or year? But if you're a shorter term investor like me, you have to be very aware that if the stock market gets to a point where it starts to roll over, we clearly see from yesterday and today's price action that Bitcoin will roll with the stock market, but then also go up with the stock market. So just something to keep an eye on there. All right. Next up, let's take a look at gold. Gold today pulling back. Again, a little bit of risk off, but notice how gold held the line here. As long as it holds the line, the bias remains bullish on gold. Silver today did eke out a little bit of a gain, but it did come back in. I still am holding my SLV position with smart money commodity members here, as I still think there could be a little bit more upside until this level. But I will admit that you're getting a little short term extended on silver. So again, could it consolidate for a few days, pull back a little bit? Probably it could, but I still think overall we'll get a little bit more out of it to the upside before at least I take profits on that position. Oil today, oil did rally to the upside. So again, it is creeping towards major resistance here. You could almost make a case for a cup and handle pattern here as well. So again, it could go, I think this could even go to 66 and maybe even pierce 66, maybe to 67. But at that point, I probably do pull the trigger on a short at that point. So again, I think near term, you look for further upside on oil. And then once we get up in this range here, 66, even 67, I'll be thinking about a short trade on oil. Taking a look at nat gas, little inside bar, green candle inside bar, which is basically a bullish pattern, a little bit of an uptick today, but it's still not at resistance here. It's still got a ways to go. And then you have support down in this range. All right. So really, again, we can flip through just a couple final charts. Meta, guys, Meta is coming into a big level. So it's piercing this zone here, but it's also getting close to a gap fill. Meta should have a lot of resistance right around here. Be aware of that. And then if we look at Microsoft, Microsoft's impressive because it did push up above the breakout of the all-time high. But ask yourself this, did it confirm? The answer is no. And it put a doji in today. Dojis are, they're pseudo reversal signals. Like, so if you had to grade a doji at the high or low of the charts gives you a slight bias that a reversal is coming, but it's not as good as a bottoming or a topping tail. Topping tails and bottoming tails are always the best. And then you obviously have the dojis as kind of second best just below that. And this is really, when I'm talking about second best, it's probability based. That's all it is. It's nothing about my personal preference. Frankly, my personal preference, the market could not give a crap about any of our personal preferences, right? It's really about what the chart is or the underlying factors or whatever it is. And we always have to remember that because, again, I've gone through literally every mistake in the book as a trader, as an investor. 26 years now, I've traded and invested for, and I can securely say that I've made every mistake that you guys have made. I've left orders out there that have gotten filled when I didn't mean to. I've bought when we were at highs and it reversed on me. I chased, I FOMO'd, all that stuff. I mean, it's all there. But the point being is that it's a learning environment, right? So, my first 5 years of investing and trading, I took every lesson in the book. I learned it the hard way and I lost money. Then slowly I learned my lessons little by little. And then I made more mistakes, but learned them a little bit more and then made more mistakes. It's just kind of this slow slow incline. But the nice thing about it is over time, the more you study the charts, the more you shut down your brain and you start focusing more and more on probability. And that's really becomes very freeing, right? Because now all of a sudden, it's not about what your personal feelings are. In fact, you just start to ignore them. And it's now looking at the charts and just saying, hey, listen, I totally get that this chart setup will fail 3 times out of every 10. But if it's gonna be in the right direction, 7 out of 10, now I have a basis for judging, do I want to take that trade or not? And that, again, is very freeing, where you stop worrying as much. Number one, you go smaller because you understand it can fail 3 times out of 10. But you also just say, all right, listen, I just have to do every trade that has this setup. And I just have to know that 3 times it's going to fail, but 7 times it's going to win. And then the money can take care of itself. And again, that's what I try to get to you guys, in terms of whether it's the Winning Trader series or our services here or the game plan or these weekly wrap-ups. It's all about fully understanding the metrics and how to read the charts to understand the probabilities. All right, guys, as always, you guys are absolute rock stars for supporting us here at Verified Investing. I really do appreciate it, guys. Again, I know I say it from time to time, but from the bottom of my heart, like, I wouldn't do these wrap-ups. I wouldn't do the game plan if I didn't get great, amazing comments. And I look through them. I don't always get a chance to like everyone because they pop up on my phone and so forth, But I do see them. Verified Investing, the team here, it drives us to be better and try to do better for you guys, to teach better, to give you better alerts, to give you better understanding and knowledge, versus what I truly believe is the biggest downfall of investors, which is social media and even mainstream media, right? It's when they talk about it on TV, like, oh, I'm bullish on XYZ on TV. guess what? The institutions have already gotten in those positions. And sure, it could go up a little bit more, but the institutions are unloading into you, right? And with social media, it's like, people all have their agendas, right? It's like, oh, let me pump this because it'll go in this direction versus what we do here is literally, this is the chart. It is what it is. I'm not making anything out of it. This is a textbook bull flag, or this is a textbook topping tail. And these are the probabilities that it gives us. And so let's either decide to take the trade or not. That's it. All right. Go have a great weekend, guys. You guys are rock stars. Thank you again for tuning in. I really do appreciate your time and effort here at Verified Investing, and I look forward to seeing you next week. Take care.